Turn on the news, flick through the financial papers. All you must be seeing is ETF this and ETF that. But ETFs can be a horrible investment.
They suck.
My name is John Ross with Finance on a Budget. Many people like to think that ETFs are the cash cows of the financial world, the big earners. Well, I'm here to say that they aren't. In fact, as I will outline today, they're actually more trouble than they're actually worth. No, it's true. Now, before you think to yourself, John, you're mad and insane, make sure you stick around because you don't want to miss out on the many points that make ETFs such a horrible investment. An ETF, or an exchange-traded fund, is a type of investment fund that you will find on the various stock markets. Basically a collection or an index of some of the hot picks on the various market exchanges. Do the NASDAQ 100 or the S&P 500 ring a bell? Well, these are some of the most popular ETFs on the planet. They follow the top 100 and 500 companies in the United States market. There are many hundreds of different ETFs out there focused on technology, medical, and transportation, just to name a few. The list goes on. You may be thinking, brilliant! I'm seeing more people that are investing in healthcare, so it's time to see some good returns on healthcare ETFs. Sorry to tell you this, but an ETF may not be where you should be putting all your money. For every person, there are many different investment strategies, but you can only make informed decisions if you understand the good and the bad. And in this video, we will be focusing on the bad parts of ETFs because there are some very basic flaws with focusing on an all ETF heavy strategy. Temptation. One of the greatest benefits of ETFs is the fact that you can constantly check out the price of your holdings. There's no waiting for the end of the trading day like mutual funds. ETFs allow you to see how your assets are doing, and if you really want, change them right then and there. Of course, many would argue that this is a good thing. Unfortunately, this level of freedom and temptation is way too juicy for some investors, and they really take advantage of it. The tightrope walking of investing is knowing when to move fast and when to move slow. Sometimes holding is the correct move. The constant pricing of ETFs is something that seriously tempts weak-willed and newer investors. But unfortunately, shifting positions is often more costly in the long run, and trading like that isn't free. Not even the free platforms. Nothing is ever free, and this leads to another huge weakness of ETF trading. Trading costs and commissions. Pay to play. That is the best way to describe this game of ETFs. When you're checking on your portfolio and you watch the dips, then you see the rises. You get excited. You do some quick math, and it's the right time to move. You sell the stock and buy that stock. Mission accomplished. Unfortunately, many people forget the hidden costs, the trading costs. There are things like management fees, execution prices, and tracking discrepancies. When you trade mutual funds or you're going through a holdings firm, often those costs are passed on to the company. But straight up ETF trading, well, that loss is on you. If you're making huge lump sum trades, then it's not really an issue. An $8 commission on a $1,000 trade is nothing. But what if you're shifting $100 around? It's noticeable, and after a while, it definitely adds up. While Webull, link below, offers free trades, other brokerage firms can easily charge you 65 to 75 cents per trade. To be clear, this isn't saying that Webull is completely free. There's the topic of order of execution, which basically means whose order gets to go through first, Fidelity or Joe Blow. This is a topic currently in Congress. Trying to navigate through that mess is beyond the scope of this video, but it basically means that you could be paying 1 to 2 cents more per share than the big boys. Seems small, but if you're jumping in and out of trades all year long, that definitely adds up. The harsh reality is that most people lose out on the trading costs and commissions. But the worst part? They don't even realize it. You don't see these numbers with the buys and the sells. No one displays it. Little control. ETFs are actually some of the most limiting investments you can make. You're signing up with an index, not companies, but sectors. What's that famous saying? A chain is only as strong as its weakest link? You have literally no control over what securities are bought or sold in your ETF holdings. The fund managers got the maths, the algorithms, the whatever. But if you take a really close look at some of the buys and holds, I have no doubt that you will be disagreeing with them more times than not. It's almost as if they handed a monkey a dart, and whichever name gets hit is a buy or a sell. I'll be honest, I just threw in that last part so that we could reuse that clip of that monkey. He's so cute. Some ETFs contain risky propositions. ETFs can really represent a sector. They like to hedge their bets. That's how they try and turn over healthy returns. They've got their sticky little fingers in every pie across that entire industry. The problem is, some of those pies you shouldn't be eating. It's true. On the one hand of the spectrum, ETFs got themselves attached to some highly lucrative, game-changing companies. But on the other, we're talking dark alleyway at night shady. There are quite a few ETFs that hold extremely risky positions with insanely unproven companies. A lot of their alternative ETFs can sound attractive to many investors. After all, the big gains aren't in the popular marketplaces. They're often in the sectors where they're about to blow up. Unfortunately, the heartless and emotionless world of ETF trading lends itself to this kind of mentality. And although diversifying your portfolio to include risky assets can be beneficial, all ETFs suffer from an excess of over-diversification because who knows which one of these big stocks is about to blow up and make all the money, which leads us to over-diversification. ETFs are playing a numbers game. Sure, Dustin Hoffman won big, but this isn't Vegas and you're not Tom Cruise.
Guess who?
Tom Cruise.
But if you are Tom Cruise, call me. This loose set of rules is what determines what stocks ETFs buy, means that the stock becomes overly diverse, even when actively managed or wholly automated. The trading strategy of ETFs is nowhere near as profitable as owning a limited number of better performing companies as opposed to the entire index. I mean, sure, Warren Buffett said index funds are great, but you could have just as easily bought Tesla last year and called it a day. Looking at financial markets, even a reasonably new investor can have some idea of which companies are stinkers and which ones are going to be blowing up in a big way. Don't forget, ARK ETF went heavy into Workhorse, and I'm sure you know what happened there.
Abandon ship!
The hard truth behind ETFs is that their simplicity really attracts a whole new breed of investor to a financial marketplace. Countless fresh-faced individuals lose millions upon millions on these funds alone. Minimum initial investment. While there are many ETFs that you can find on retail platforms like Webull, link in the description below, there are many, many more where you can theoretically invest in. Something they don't like to tell you is that many ETFs don't like small trades and minimum investments. They impose a minimum initial investment. While this isn't a problem for the big boys, you and I, well, we just aren't big boys yet. While a single ETF unit of $25 stock looks like a great investment, forcing a $1,000 minimum buy-in is not. Unfortunately, these sorts of limitations are becoming more and more common with ETFs. At the end of the day, you should be convinced about how horrible ETFs truly are. It is clear to see that fundamentally, ETF trading is just a bad idea all around. It chews up rookies and spits them out. But I'm not blaming you. On paper, ETF sounds great. But as you can see, they're inherently flawed financial instruments. If you like this video, be sure to check out my other video on why ETFs are great. Please give this video a like, subscribe, and if you found this video informative, please leave a comment and enable the notification bell. Thanks for watching.